So stick around here because, as we mentioned, markets are recovering throughout the course of the trading day so far after opening very deep in the red. The Nasdaq had dipped 500 points at its lows of the session. So let's take all of that and broaden out the discussion. So joining us now is Fitz-Gerald Group Principal Keith Fitz-Gerald, also G-Squared Private Wealth Chief Investment Officer Victoria Greene, and, of course, still with us here is Jeffrey Hirsch from the Stock Traders Almanac. So now, if we take a look at all this, and I'm going to start with you, Victoria, we bring you often on here to talk from a trader's perspective. Is this an environment right now? We've seen a lot less volatility relative to what we saw 2 to 3 weeks ago. Does it feel like it's okay to start dipping your toes back in the market?
I'm more sell the rip than buy the dip. I think we're stalling out here. Obviously, the next 2 days with 4 of the Mag 7 reporting may confirm or deny where this goes, but it does look like we've stalled out a little bit on this relief rally. So if you got uncomfortable, if you wanted to sell on April 8th, we're advising you to raise a little bit of cash now because it's better to sell after this recovery here than if we go ahead and retest our lows. So I'm very concerned of a retest of lows. Again, though, I've been talking about how you have to read the tweet leaves. I know it's a terrible fun, but right now we are being jerked around about what comes out on the macro, what's getting tweeted, what deals are getting done. And so you can see those big pops like we saw. So we recommend that you have to be a little bit uncomfortable right now. But if you wanted to panic and sell on August 8th and 9th, we do recommend you kind of bunker down a little bit right now. I don't think we're through this. We've got a lot coming through. I don't think the GDP was actually all that bad. A lot of it was just pulling for the imports. The one that scared me more than the import-export number was the reduction in federal spending. And that, I think, is a canary to watch. Are we actually going to get a reduction in government spending, which could then trickle down and slow down the economy? And dare we say the nasty word stagflation, if that might be coming down the pipe.
All right, Keith, this is a time right now where we were seeing the initial parts of what might be hard economic data, the actual happenings, starting to echo what we've seen in some of these softer survey-related sentiment data over the course of the last few months. Do you feel as though the economy is still in a good enough position, or do you feel as though there are economic concerns that are starting to work their way through the market narrative?
I think that's a very prudent question, Dom. And, my guts and 45 years of experience that I like to think accounts for something are telling me to lean in, because what I'm seeing and hearing is that there are tariff-proof stocks out there. There are companies that are still very strong, putting up good numbers. So those are the things that I'm actually going to lean in and go shopping with more of an investing philosophy than a trading philosophy at the moment.
Okay, so that's a great tease. My follow-up question will invariably, what are those tariff-proof stocks?
Well, take a look at Microsoft, for example. CEO Satya Nadella let loose with something yesterday that I think people totally glossed over. He said 30% of Microsoft code stack is now being written by AI. Imagine what happens to profit margins when suddenly you've got AI writing AI and you can concentrate on moving forward. Faster product delivery, better intelligence, better Azure, better AI, better monetization. Profit margins, I think, are going to expand considerably in the next 12, 24, 36 months. The market isn't even remotely recognizing that yet.
Jeff, jump in here.
So, what I'm seeing here is that, we're coming into the worst 6 months, and the, situations that I mentioned, we got some trouble ahead. I think 12 months from now, markets will definitely be higher. We've got some technical indicators flashing green. There's wide breadth, thrust, and other things. I'm saying thrust and verify. I think we need to get through those levels. We're still, not above that April 2nd, April 3rd gap. There's still an issue there. Then there's the election gap. So there's a lot of overhead reason, the declining 50-day moving average. And, we're playing a little defense. We went back into the Qs and the IWMs, the NASDAQ, about a week and a half ago. So we're up on that.
And small caps. You mentioned that.
The Russell 2000, they were really washed out. We got stopped out of those, and we're back in. We're also playing a little defense against the dollar weakness with some of the currency ETFs, the Swiss franc, the euro, and the yen, as well as the DBA agricultural. Worst 6 months, we go into bonds. I like the real short term. SGOV and SHV are the ones.
What did you say? Thrust but verify?
Thrust but verify.
And explain that for a second. What's the thrust?
Well, the old thing is trust and verify.
Right.
But we have this breadth thrust that has this perfect record. I knew Marty Zweig back in the day. He was a real doll, but and a brilliant analyst. So we've seen this flip from very few advancing shares to a lot of advancing shares in a short period of time. And, we've got that thrust. It's got a perfect record. These kind of perfect records, to me, are just bound to be broken or primed to be broken. So we want to verify that with some other technicals.
Thrust but verify. Keith, before we go, first of all, you fixed your shot, and it looks great. You look better than ever. But second of all, I noticed Palantir, one of the stocks in the green this month. Are you still a fan of that one? NVIDIA? What are some of your other go-go darlings?
Oh, my goodness. I haven't let go of a single one of those shares. And as a matter of fact, I hope I'm smart enough to buy a lot more. That's where the world is going, to the discussion Dom and I were just having. You got to lean in at moments like the present when everybody thinks that's not even remotely possible, is where the biggest, best, and most consistent profitable. So NVIDIA is still on the list. Palantir is still on the list. Tesla is still on the list. Costco is still on the list.
All right. Speaking of high valuation companies, and real quickly, Jeff, before we go, what is significant? What are you watching today to see if we close in the green? How close are we?
I just saw the Dow flip green over there, a moment ago. I'm not sure if it's back and forth there.
Yeah.
We need a little bit more for April to be positive and a little bit more for the best 6 months. So it's going to have to be a big rally at the end of the day for me to get really, more bullish than I am right now.
All right. Appreciate it very much. Thank you all. Really glad you were here. Jeff Hirsch of Hirsch Holdings, Keith Fitz-Gerald of the Fitz-Gerald Group, Victoria Greene of G Squared Private Wealth.